let's get rid of this. Basically, this is the V-shaped recovery here. You see these highs here? That was the lower high. Went all the way down to put in a lower low. And it's come all the way up to put in a higher high. That's a V. See that V? That's a V-shaped recovery. And technically, there's two ways to make a V. You can continue to come to the neckline for a test to go up. Or you can now pull back to do that. And who knows, no one really knows what's going to happen next. But let's just go with the idea that we have a V-shaped recovery now. That's a V-shaped recovery. We haven't seen those in a while. So that's pretty bullish to have that kind of price action. Lower high, lower low, you know, like this proper V, I would say. You're still putting lower highs from this high here, lower high, lower low. So maybe it's not, it would be better if it went up to take this higher. But I think that's a V, huh? It looks like a V from here. So within the range. We'll probably come back down to 50 fib. No, maybe that. Let me have a look at these levels. Washed weekly. That's an interesting dotted line. Range high, range low. Back. Do you want to do that? I think we're gonna see a pullback here, huh? Because we're coming to the end of the day, we're coming to the end of the week. Really bullish day. That's like a bullish engulfing candle. Really bullish. And the week is a nice piercing candle. That's a piercing candle. That's a reversal candle. The next candle has to be green. I think it will be because you have a nice piercing candle. You've got this bearish engulfing. And then you've got this piercing. You've got this piercing candle. Probably a pullback and then up. Probably that's kind of what I'm thinking. Pullback and then up. Let's just have a look at the SME gap to see where it is. Is there an SME gap? CME gap, not SME, CME. The futures gap. Yeah, there is a gap. So wherever we close today, it's at 117425. I'm going to mark that out. $425. So we have a gap there. Where's my, there, single pins. That's what I was looking for. Chart's a bit messier right now. So we have a little gap there. Let's have a look at the order flow. Yeah, we're getting... What are we getting here? Pretty bullish here, and bullish absorption. All day, really. And now we're getting bearish absorption in these highs. So we're getting a bit of both. We're getting a bit of bullish and bearish, but now we're getting a little bit of bearish because the CVD's gone up and the price hasn't. You see from this high here, this pivot high here, which was at 3 p.m. to this pivot high here, which was at 8:45 p.m. You see the price is lower, but the CVD is high. So we're getting some selling here, which is absorbing the price to the upside. But also at the lows, we're getting some buying. So getting a bit of both. We're above the VWAP, above the daily open, but I mean, the day's almost over. And let's just have a look at the points of control. There's some single points here, 115, 185, 115, 185. Let me just mark those. Get rid of these. It's a bit lower down though. It's much lower down. All the way down to there. One, 5, 115, 619, 115, 619. So we have single prints down there. I honestly think we need to go down to here, to be honest with you. Slightly lower than the 382, all the way down to the 50 fib and these single prints to get this market bearish as hell. I really think that's how we go down. We go down, we take the liquidity from these lows. It looks like it's going to break down and then actually bam, and then we rock it. The problem is you have this gap and the price could also, you know, I don't know. I don't think it's just going to go down. Huh? We're above the point of control as well. That's the thing. So it's hard to go down when we're above the point of control. This is not easy. It's actually a lot harder this week. I wouldn't mind to see a little... It's going to look really bearish. Yeah, I'm not sure of that one. Let's have a look at this again. Can't really tell on the order flow and the charts, Excel charts. I think what I need to do is clear this up. Let me just put this corrected out. Close the gap. Okay, this is better, isn't it? A little bit cleaner. It's good to have clean charts. Go to a slightly higher time frame. Yeah, I think we got to go down. I think probably to the local value area low would be the right place, probably. Just looking at it, and it's a 382. We have a gap, but previous week NPOC, that's probably gone now as well. Do you know, I mean, I really think it'll be really nice to get a wick down here for a swing failure here. Just to tap the gap and this 50 fib, that's all. I think a little wick down would be really nice. And actually, really, the price just kind of, it's a big SFP. It's a big swing failure of these two pivots here. And it just bounces straight back up and you don't actually lose the local value area low. So on slightly medium time frame candles, it looks like we didn't go down. We just wicked down just to tap that 50 fib. And so actually, even though I don't know if it's going to happen, you never know what's going to happen. That would be losing the CME gap, which is here. So you could drop down and have a little bounce to reject and then to go all the way down there, bam, back into the value area, and then we have we rocket. And so actually what I'm thinking is just a wick. And so when you bring these trend lines back in, it would look like it's dropping and faking to the downside. It's like you're losing that trend line that you've reclaimed, but it's actually a test. Little test and liquidity one, just a 50 fib back test. But it has to kind of swing failure these levels. And really, that's the entry there, just on the reaction. And then you're probably taking it to all-time high, probably. You're going all the way to the top. And that's your trade, huh? That's what I'll be looking for. And actually, if you just have a wick, it doesn't matter if you enter late. You have a different ROI. But even if you just wait for the wick and then just enter when the price is holding, you have your invalidation. That's your 1% risk. You have your trade plan. You get the reaction. You've taken the liquidity. The lower the better, but it doesn't matter. You're getting a 1 to 7 risk to reward because you're targeting the all-time high on that risk. If you see that reaction, if you see it, then what you're getting is a nice clean back test of this trend break. Plus you're getting the liquidity grab of these lows. Plus you're getting these single prints filled and a back test of this 50-50 fib. And you're actually, the price is still holding within the local value area low. So you get lots of shorts trapped and then bam, right back up. And that's how we roll right up. That's like a V-shaped recovery. And that's kind of why I'm saying 50 fib. Because you have a V here from this pivot. And you kind of want it to go all the way down to the 50 fib off that V. And that's kind of what I'm thinking now. And obviously, you could potentially short just down to those levels. And you possibly would short. And you'd have to have a... It's always easier to short a swing failure. But you could just short a sell-off. You could just short and have a... Again, short right now, shorting, the risk to reward is relatively still tiny. without the reaction. Because you need to put the stop loss above the current pivot, and then you're only going down to there. You're only getting a potentially a 1 to 3 if you hit there, and it might not. It might just stop there, and then you don't have the risk to reward to just short there because your invalidation is too high. Sure, it could just go down, but it could also go up and then down. So you get stopped out before the price goes in your direction. And so it's a bit of a tricky one here. And this would be better to have to see this kind of price action, then you can confidently take the long, because you're trading a V-shaped recovery of a back test to the 50 fib, and then you're just holding support lines, which is what you want to see. So it'd be a lot easier to long if you see that price action than it is to short right now. Even though if you short right now, it could probably go down at the end of daily, weekly close. So that's kind of what I'm thinking on BTC in the short term. I really think we should go to all-time highs. Okay, I think it's about time. Yeah, why not? Why not? Next week, green, all the way to all-time highs. That's a bearish engulfing followed by a piercing candle. I think that's pretty bullish. And you've back tested this previous week high, and you've got a higher low in this week. I think this is quite a nice bullish formation that we're forming now, which is basically your flag break to the upside effectively. That's what I think we're experiencing. And you know, it is possible for the price to just go up. It is possible for the price to just go up. Like, no one knows what's going to happen. People could crazy market buy at the end of the day. And even though you're looking for a low to form like that, to do a long, you know, it is also possible for the price to just find support here and just continue going. And that's it. You know, it is what it is. It could always do that. But this looks like a breakout. It looks like we're breaking out. So I wouldn't mind getting a back test of that trend line break. That's kind of BTC right now. I don't really think there's much to report. My target is actually technically 130,000. So if we were to get a pullback like this and a risk reward of risking 1%, I wouldn't say easily, but all the way up to 130, you're making a 15% increase. Risk 1% for 15%. That's a really good trader. If you get that reaction, and you get the reaction, you can risk 1% and you can make 15%. That's a really good trade. If you could hold all the way to 130, and you wouldn't hold, what you would do is you would take profit in this instance, probably back at the point of control, because the price could always reject and go down for a lower high here. So that would be your first TP, and you're not going to make 15% because your first TP is a 1 to 2.5 trade, which is still okay, but you'd probably take off half there, and then if that goes up again, then maybe you'd aim for the top there, all-time high, take another half off, and maybe you'd let the runner run for 130k. It's kind of how you'd play it. You're looking to take 3 TPs there. One at the point of control, one at the previous all-time high, and then one at 130k, and that would be your trade. And so you're not walking away with 1 to 15, you're probably walking away with 1 to 7 if it executes correctly, but the risk is reduced significantly after you take the first TP. You're basically going to zero risk. So that's kind of where I've got Bitcoin at the moment, and I do think we need to go down to go up, and I think probably the 50 fib is the right place probably to get a reaction on. Okay, so that's Bitcoin.